then you could take a long on the pullback. And so I actually drew it out. So we were looking quite strong when I first started the stream yesterday, but I said you wouldn't long here because you're longing into resistance, resistance being this value area low, this blue line, and you'd wait for acceptance. And so in my mind, acceptance was 2 30-minute candles closing inside of the value area. This isn't my idea, actually. This is used by professional traders, this idea of acceptance, and the idea of 2 30-minute candles, not my idea. So I'm basically just, I learned this and I'm passing on the information. But generally speaking, it does work, generally speaking. So nothing is 100% when it comes to trading and chart analysis, but you have high probabilities. And when it comes to calculating whether the price is accepted, there's a high probability that if you do get 2 30-minute candle closes within a area or above a level or below a level, then that's acceptance. You know, that's the price is being accepted into the new area. And so we saw this acceptance with these 2 candles, and naturally the price came back to back test this value area low, and as soon as you see a reaction you can enter, and naturally your invalidation arbitrarily could be somewhere underneath the value area low because you're not expecting the price to come down again. But as soon as the price starts going up, you have a pivot and you could long. Okay, so that was a very acceptable trade, and I think most people would have taken profit by now because the price has already moved 2%. You know, generally speaking, when it comes to Bitcoin, and the price moves 1% away from your entry, you'll be looking to take profit. And because you have a very small invalidation, you're easily taking your 1% of your account in that kind of trade, and then the rest you'll just leave to run. Now you could leave your stop at where it is underneath the low, and it should be you would take no loss on that trade, or you can pull it to break even depending on where you entered. But you have to remember that the price can always come and stop you out and continue. You know, like if you do break even, your invalidation is now incorrect. Yeah, the invalidation is now underneath this pivot, so the price can always come back and continue. And if you're going to draw like a golden pocket area, you know, at the very least you'd want it somewhere underneath the golden pocket. If you do a break even, then it really has to be in a correct area. But that's, you know, if you've taken profit, your trade becomes a risk-free trade. It doesn't really matter. All right, so that was yesterday's trade. I think that was quite a successful technical analysis. What I'm going to do is delete all my drawings. I'm going to redo my charts, and it's good to do this like regularly. Some people do it once a week, and I don't think you need to do it once a week unless there's some significant changes, but it is good practice to clear your charts and just re-look, re-evaluate. Let's have a fresh look and see what's going on. So I'm just going to take you through it as well, because I think for a lot of people, they don't really know how to do it or how to begin. And so maybe you can pick up something. So usually what I'll do is start off with doing the levels. Start off on the higher time frame, the monthly. For Bitcoin, it's the monthly. I think for like lower liquidity coins, I'll go a little bit. I'll go even higher to like 3 month or more, like half a year or even a yearly. But on the Bitcoin, you can start with monthlies. And so what you would do is you're looking to identify areas of liquidity, levels. They're called levels. The strongest ones is where the price turns. So you see up this high here, you see how on the monthly time frame you had this green candle, it squares off, and then you form a red candle and the price goes down. The price goes up, squares off, and the price goes down. That's a very significant level, and you'd mark that off. It's called the monthly level. And then what I would do is I would color it to its own color. And usually when you're marking off levels, you're looking to mark off levels that haven't been touched before. And so what I mean by that is in this next monthly candle, you see how the price, if I zoom in, you'll see how the price came back traced, or back, the price came back but couldn't get to the top, it only got to halfway, and so the level wasn't touched by the next candle. And the further on, the prices never got back to that level after that level was created. So in effect, that's an untouched level or untapped level. Those are the ones you're interested in, the untapped ones. And so this is another monthly level which has now been tapped. So in the current month, the price has managed to get back to that level, and so now that level is considered tapped or taken, or you know, you can, whatever terminology you want to use. Yeah, so I'll still leave that level because it's relevant. It's relevant to the current price action. Because it's relevant to the current price action. Sorry, I'm eating my cereal as well. So, you know, life continues. So, yeah. So, further down, I don't see levels, but I'll just pull them out. I'll show you. So that was a monthly level, which is now tapped. So it's irrelevant, probably. There's one down here. There's one down here. Now, this one is an interesting one because the price comes down to the level but doesn't actually touch the level. So it's still relevant because it hasn't touched, but some people would say that it was this level was front run. That's a front run level. So therefore it has been touched. Because it has been touched, it was just front run, but the liquidity on the most part has been taken. But I mean, I think if we were to go back down there, it would still be quite a strong level. So it's worth considering, simply because it's underneath this wick, and usually there's a lot of liquidity that lies beneath wicks of candles. So these are your like strongest levels in terms of where the liquidity lies. And actually, as I said, this level, the liquidity's been taken. Yeah. Now, it may still offer resistance, and then if we eventually do get above it, it may flip to support. Yeah. So because the current price action is very close to this level, I think in that respect, you would probably keep it. You'd probably keep an eye on it. Yeah. But you have to bear in mind that because it's been traded through once, the significance of that level has become less relevant. Yeah. Whereas like this higher level is much more relevant. because it has never been traded through. So naturally, there's going to be a significant portion of liquidity at that level. So if you're looking to set limit orders, that's where you would put them, at those levels. Yeah, it's a good place to take profit. If the price ever gets there, that's a good place. So naturally, you've done the monthly, and then you go to the next time frame down, which is the weekly, and do exactly the same thing. And so what you're looking for are those reversal candles, the squares, the green and then the reds. And you're looking for them where they haven't been traded through. So, I mean, again, this is again the same situation. It's like a front run weekly level, but if you look, it hasn't actually been traded through, you know, because it's above a previous weekly wick. There's probably a lot of liquidity there. So I think that's probably going to be a significant level. And also it kind of lies with this previous weekly level here. So I think there's quite a strong level there. Let's see where that lines up. Now this one you see has been traded through. And this is what I was saying. This one up here, it was traded through before, because when you look at the candle went up before it went down. So it actually, this one here was traded through in the first instance. Yeah, in the first instance. So even though there's a weekly level, it's become diminished. However, the other thing you have to bear in mind is that even if there was a weekly level there, because it's right next to a monthly level, consider the monthly level. But the monthly level is a lot more significant than a weekly level if those levels lie in the same area. All right. So sometimes yes, sometimes no. Like here at the highs, they are close, but they're not close enough. You know, there's still a distance of a good part of $4,000 between these two levels. You have a monthly level and then you have a weekly level. So neither of them have been touched. So you would consider them. And then obviously we look lower down and see where our levels are lower down. I've got to mark these. It's good to use different colors and labels, and then put your put it all in your templates. Then you have to do it every time. It's good practice. So like here you have a monthly level and you have a weekly level, pretty much at the same place. Not this one. The one I'm referring to is this one here. You know, pretty much. I'll keep it for now, but that's pretty much where all your levels are. And there's here, this one is on the same place, so you just ignore it, you just delete it. It's not a big deal. These are all your weekly levels now. Okay. Anything else? Not really. So there is one here that we've been trading through, but because we haven't actually closed underneath it, it still seems to be relevant. So I will leave it up, but you have to, because this isn't a liquidity level in the sense that there's liquidity there anymore, but because the price has reacted off this level over the last 6 weeks, you know, it may be worth keeping it just as a point of reference. All right, and then we do the same thing, exactly the same thing for daily time frames. Obviously, if you have a daily time frame level that corresponds with a higher time frame level, then you probably keep the higher time frame one. It's exactly the same idea. If it's not traded through, then you're expecting there to be liquidity at that level. So this lower one here has been traded through after it was formed. Look at this. That's the level, and the price came down to it twice. So that's that level's been traded through twice. So naturally, all of the liquidity at that level has been consumed, has been gobbled up. We won't take the current day's price action because the daily candle hasn't been formed yet, and it will look to higher to see where we have the same kind of levels. And then we have some down here. There's loads. I mean, you can go all the way down. Like, look, if you really want to. I don't think I will, because there's quite a lot. I don't know if the price is going to go down that far. Who knows? And then on the way up, these ones look like they've all been traded through. Let me see. Yeah. And anyway, it corresponds with this one. That's that. It's been traded through. This one lands in the same place. This one's been traded through. We have one up here. And these ones are together, and that one's been traded through. Okay. So that's that. And then on our way down, do the same thing. These ones have all been traded through. This is our next one here. So next one here. Pretty much that's it, unless you want to go all the way down to here. Are we going to get down to 20,000? Well, if we do, there's a level there. So it's just good it's good practice to just sometimes clean your charts and just start over, and then see if there's if you see anything. So looking at these lines, you'll see clearly that not only are we surrounded by liquidity levels, see where the price is now, there's liquidity levels above us, there's liquidity levels below us. Yeah. So naturally it's quite it'll probably be expected that the price isn't going to move easily up or down. Yeah, because you have liquidity levels, you have people placing limit orders, and that's going to act as support as resistance as the price moves. Now, if for some reason we manage to close on this lowest daily level here, you see there's a gap. See that gap? You have to, you can see that now. Yeah. So naturally, there aren't going to be anyone placing limit orders in any significant way in that space, and you have the same situation above us, above that weekly level. So between this weekly level, which is, you've got a little bit of a gap going all the way. So for 10,000, so if we were able to close the weekly time frame here, then you'd probably expect the price to go up to 60k quite fast, probably, because there's no liquidity. And when there's no liquidity, then the price will slip through that area really quickly. There's no orders. All right. So these are the levels, and what you would do is you take all of these levels and you just chuck them into a folder. Call them higher time frame levels. So, all right, and that's that. And then what you'd probably do if you're looking to do TA is pull some volume levels. There's different ways of doing this. You can do the whole range. So I'm using buy bet derivatives, inverse perpetuals for charting, and obviously different charts have different information. And that would be the whole range. if you consider that all of the price action as a range, that's the whole range, yeah? So naturally, if you look at that, we are at the value area of the range, and the point of control of the whole range is further down, much further down, at 9,356. The value area low all the way down at the COVID low. It's quite a big range, and I think it's unhelpful actually. So probably you would just ignore it. And then what you're actually trying to do is you're trying to divide the chart up into smaller ranges. So I think for the sake of argument, you'd probably ignore all of this previous information. All of this information is pretty much irrelevant because it's quite low, and it doesn't really help your analysis in the current time frame. So clearly the price is split into two divides right now, if you can see. I'm going to do it with one of these lines. I'll delete it, but I'll just show you. There's a little bit of a divide here. And so you have this upper range. You have this lower range. See that? And now we're back in the upper range. Yeah. And usually when it comes to ranges, they're horizontal. Usually. Yeah. Obviously you get channels, but I mean, when it comes to ranges, they're horizontal. Like rectangles. So I don't really mean, you can get ranges which are, you can get different kinds of ranges, like if you're in a channel or if you're following some kind of trend line. But really the ranges are horizontal, and they traverse in a diagonal manner, but actually you're going from level to level, which are horizontal. So not even usually, always. So these are your ranges. And so what you would think of doing is you take this tool and then you would identify the ranges, which I've done. And then the candle which enters the range is where you initiate the pull to the candle that leaves the range. Yeah. And this is the weekly time frame. Maybe I'd zoom in a little bit just to get a little bit more precise data. Let's see if we can get the right candles. Yeah, they're in the right candles anyway. So you have that, and do the same thing with this upper range. There you go. Delete that. So we have our bear market range down here. This is our bear market all the way until October, when we pretty much left the bear market range. For the previous bull market. And then the current range. So because we're back in the upper range, we take the current range. This is the current range. And so this is on the higher time frame. So this, right now I'm just looking at the higher time frame. I'm not zooming in. I'm just looking at the overall perspective of where we are in terms of the volume. And some things to note, just looking at this these volume ranges, is that in this bear market, in this whole bear market, the point of control, which is this red line, which is where most of the volume was traded at 20,000. If you look at the range, the value area high and the value area low, the point of control is in the lower part of the range. And generally speaking, that's a bullish range, because the point of control, the volume, is in the lower part of the range. And then here you see in this previous bull market range, the point of control was in the highs of the range. That's a bearish point of control because it's in the highs. So if the point of control is in the lows, it's considered, usually it's considered bullish. And if point of control is in the highs, it's considered bearish. So right now, as we're forming a new range, and that's effectively what we're doing, like we've only just begun this range, excuse me, and as you can see, the point of control is at the moment above us. It's quite bearish at the moment. You have to bear that in mind. Yeah. And so what you would do is, so in this current range that we're at, so this is the current range, you can mark these levels off. What I'll first do is I'll put these into its own group. So I can get rid of them, put them back if I want. Right. And then what I'll do is I will mark this. And I'll call it value area high. Value area low. And this one I'll call point of control. So this is of the current range, yeah. Not the overall price action. This is just where we are now. And then we have these lower levels. And so what you can do if you want to, just as a point of reference, you can rename that to lower range value area high. I think that's enough. I don't think we need to go mark these down because they're quite low. Obviously, if the price comes down, then you'd think about marking it. Oh, you could mark it down. You probably would actually, just to do it properly. Value area low, and then that would be previous range, right? So you have a previous range point of control. You have a previous range value area high. And you have a previous range value area low. Right? And these are your volume levels. Okay. So you can put all of these into its own group. And I didn't make this up. I've learned this, so I'm just passing on useful information. People are interested to know, how do I know? Didn't make any of this up. I learned this from basically from Chart Champions. So some of the things they teach is pretty decent, and I think this is quite decent. Excuse me. So there you go. So we have those. I mean, if I was going to put all of our levels there. There's a lot of lines, a lot of levels, right? So that's the next thing that you could do. Once you have all of those levels, there's a few other things that you probably could do when you're doing higher time frame analysis. But let me go to the next step, which is actually probably quite interesting too for a lot of people, might be quite interesting. So what I would probably do is go into exocharts, and it's obviously a lot of people won't have this, but that's fine. And then there's this template that you use. Let me find it. And then what you can do, it's called a TPO chart, and this is based on time. It's not based on volume. And then it gives you different levels. But hold on a second. That is based on volume. No, the cluster is. Hold on. Let me figure this out because I haven't done this in a while. It's not the right chart. That's the TPO chart. Hold on. Okay, not that one. TPO. Order flow. I'll do this. Can't remember. Yeah. Yeah. So actually what you have, okay, so this is what I want to explain. So what you actually have are, so each of these bars represents monthly volume. And so right now this is our current month, and it's showing you the value area. So you've got the value area high, you've got the value area low, you've got the point of control. So this is all based on volume. And then what you have is in previous months, like 2 months ago, wait, this is January, December, yeah, December, November. This note indicates the point of control. And what you can see is the price hasn't traded through the November point of control yet. And so that level is also a significant level because it's called a naked monthly point of control. So it's a previous monthly point of control which hasn't been traded through yet. Yeah, so it still acts as, it still gives a reaction when the price comes to it because it's never been traded through ever, right? And then as you go back in time, you can see if any of them have been traded through, and this is the only one. And then if we go up, let me see how far back does this go. Go up. There's one above us there as well, I think. Let me see. Oh, okay. No, do you see you see how the price went up and it formed a reaction? Naked point of control. So they're very significant levels. So this one at the moment is $37,005. And then what you would do is you go back to your chart and you'd mark it off as 37,000. And that would be your, do I have a level? Yeah, naked monthly point of control. See that? So that is also a volume level. Let me put these in first. And then we can see where they lie. So they're quite important levels. So you have the monthly time frame, then you have the weekly time frame, and then you have the daily time frame. They all of these time frames are relevant, all of them. And so obviously the data is pulling back, and all of these red lines are points of control in previous weeks which have not been traded through, right? And obviously we want to go all the way back into the bull market as the price was high to see if there's any high ones, and there's a few above us. So 56920. Let me do it this. Six, 9, 2, 0. Um, 42580. 45970. Three 7700. Three 4440. Much lower down, there's a few more. It's quite low. They're quite low, so probably just let's ignore those. If the price goes down that far, you'd have to relook at it and mark those out. And then obviously you have the which one was it? The daily. Same thing with the daily points of control. So we have a naked daily here. It's 39000. Do exactly the same thing. So call it zero zero zero. What do you want above us? 45900. Three 6400. Three 4300. There's a couple down there together. 30600 and 29800. We'll be back in back in 2 minutes. All right, I'm back. Sorry about that. I'll probably cut it out later. So basically what we have are our naked levels. And so basically these are previous points of control, either monthly, weekly or daily, which haven't been traded through yet. And so we call them naked, right? And then what you can put these back into, okay, another group, rename naked volume and hide them. All right, so we have all our levels. We have our higher time frame levels, which are liquidity levels based on candles. We have our volume levels, which is our range pool levels with current previous ranges. And then we have our naked volume levels, which is based on previous points of control, which haven't been traded through yet. We have all of those levels. It's a lot of levels. Once you have all of that, then we can do some more kind of higher time frame analysis to see what's going on. Now, without going into detail about Elliott waves, so if you look at the previous bull market, we had a 5 wave here. I'll show you. All the way up to there. That was like our 5 wave in the previous market. See that? So you start at 0 down here. 1, 2, 3, 4, 5, right? And we've had a correct, and this is a thing. So this correction still, I mean, the thesis is up, that's the thing. And so some other people are saying that we're still in some kind of bearish correction. So if we are in a bearish correction, then yeah, let me bring it down actually. So if you're looking at something like this, that would be a bearish higher time frame correction, something like that. And then within that correction, you're looking at like a ABC like that, and then you're looking at another ABC, and then you're looking at another some kind of ABC, something like that, right? And then what you get is you get this kind of higher time frame WXY or whatever it is, XYZ, and then you continue. Then you have a nice bullish impulse, and you go into another 5 wave Elliott wave count, whatever. Could be anything really. So that's one way of looking at the price action. This is one way, and then that, based on this price action, you'll be on this theory, you're looking at potentially us being in a corrective move now, heading all the way down to wherever, literally wherever, we don't know where. The other theory is that, so let me just put that into, let me get rid of that. So this is this. So that would be like a bearish EW count. That was the first 5 waves in the previous market. And then what you'd be looking at is for this to be your ABC. So just whatever really, one ABC. Doesn't really matter, this correction, it's just like an ABC. And then we've actually begun, and this is the wave 1. This whole thing is the wave 1. So we actually begun the wave 1, and now we're in the 2. And this would be bullish, the bullish count. So that's your 1. Now we're looking for some kind of 2 correction for a 3, 4, 5, something like that. And so we don't, if this was the wave 1, I mean, that would make sense, because if this is the wave 1, let me just pull that across a bit. And obviously this is all in context of the halving, and so obviously that's on a lot of people's minds. And so no one's actually expecting this to be some kind of bearish higher, lower high on the higher time frame. Because in a higher time frame, we could, it is possible that we're still in some kind of this behavior and we're not actually going up. It's possible, but no one's expecting that. So this is where the jury's out. This is what we have to consider. Does history repeat itself, or does history take a turn? And I think in the context of ETFs, I mean, when you look at, if you were to compare it to, good morning, Dan, how's it going? I'm just doing a full BTC analysis. I've put all of my lines, my levels, and now I'm just going into Elliott waves. So welcome. Thank you for joining me, and obviously welcome to contribute. So I mean the thing is that when you look at gold, and so gold is the closest similarity that we have to what we're experiencing now, and the gold, I've marked it out. So gold, we are in a similar situation as gold. This is when the gold ETF launched. It was in that week, the first week of November or so. And gold was similarly coming back to some sort of previous high. It wasn't the all-time high, because it was obviously had made higher in the past, but it was quite a significant pivot high, and there was some kind of topping pattern here. And naturally what happened with gold is that we had a little bit of correction before it went back above the high. The correction lasted 32 weeks. That's 273 days. There was a correction on gold before it actually broke out to go up. 32 weeks. So I think that's something to bear in mind. I think a lot of people obviously have this idea that Bitcoin is going to go up, and so do I. Why not? Join the crowd. But fundamentally, when it comes, technically, when you're doing analysis and when you're comparing it to other assets and other price charts, it is possible that this behavior repeats itself, but on Bitcoin, not on gold. So we had a little bit of a rounding bottom on gold, which lasted 32 weeks before this candle. This is the candle in question, which broke out from the high that had been made, and that was, actually it's 34 weeks on 34 weeks. So if I was to go to Bitcoin now and create that path from, this is the candle in question, that would put us into September. See that? 34 weeks. And so is it going to be similar to gold? And I think that's a good question to ask. Are we going to get this kind of behavior similar to gold? Let me just mark that out correctly again. People are always fascinated after the event when history repeats itself, and they go, oh damn, why didn't we see that? We knew. And no one can believe that history can repeat itself, or that fractals copy each other themselves. No one believes that until it happens. So here we're looking at the 2nd of September. So let me just mark that out. And that would be the end of 2. No, actually that would be when, technically that would be when we break out. So I don't know where the 2 would land, but if we were to follow the pattern of gold from the BTC ETF launch, with this inverse red pin being the ETF launch, then you're basically following a pattern to break out the high on the 2nd of September, like that. And no one really knows how the price is going to behave, but you're expecting this level to be broken out on that week, the first week of September. That would be a complete copy of gold. And so in that correction, you're expecting some kind of ABC potentially. I don't know how it's going to be, obviously. Probably you're looking, because if you're going to break, see, this is the thing, if you're going to break out of the high on that day, then that's not where the two, that's not the two's somewhere lower down here. So possibly looking some kind of, I don't know, flat correction or something. Maybe something like that. I don't know. I'm just making this up. For us to start going up sometime in the summer, and you end up with some kind of rounding bottom, which would be a complete carbon copy of gold, basically. So that's kind of what I'm imagining right now, just based on gold. Like, I'm just literally saying that's what happened to gold. Everyone's saying this is just like gold, so let's just imagine that this is what's going to happen in the future until it doesn't. Okay, so this is what I have in mind. And obviously the halving happens at the end of April. Can mark that out as well. And we don't really know what's going to happen. And in previous years in the halving, it's always gone up, hasn't it? And is history going to repeat itself? Are we going to get like a zigzag before the halving, and then the price is actually going to start going up? I don't know. No one knows. Okay, but this is all kind of speculation. But a bullish Elliott wave count would be that we have our correction now. And obviously the other bullish scenario is that this wave 5 hasn't, the wave 5 of this one. So if we're in a bullish count now, we're in a 5 wave, and this is the wave 1, then the other scenario is that we haven't completed the 5 yet. So we have our 1, 2, 3. This is our 4, and this is our 5. Something like that. And we're actually still going up. We're actually still in the 5. The 5 hasn't ended, and we could still go further up. So we have a really extended 5. And so that's the other thing that we have to consider. I think if we do go up now above this previous high, which is this inverse pin that we've created in the highs, this red candle, if we are to go up now and continue going up, then that would totally invalidate the bearish count, where some people are considering a bearish Elliott wave count, this bearish one. Yeah, so if we are now to make a higher high and continue going, then there is no bearish Elliott wave count. That's completely invalidated. So the bearish Elliott wave count is only valid as long as this is the significant pivot holds. And then we have to see if we form an ABC correction, or if we truly have a much deeper ABC to form the XYZ on the higher time frame. Yeah, that would be really bearish, and obviously no one's expecting that, and so it's hard to imagine until it starts happening. And I think the first thing, if it was the first thing you have to do is you have to lose a lot of levels. And so if I bring back all of my levels, all of my lines, we have a lot of liquidity levels in the way of the price to go down. And naturally there's a big gap. You see there's a little bit of a big gap between 34,000 and 30,000. There's a bit of a gap. And I think if we start going down to that, I think that would be pretty unexpected. Like, I don't think that would be very bullish if we lose all of the liquidity levels in our higher bit range here and we start attacking the liquidity in the lower ranges. Yeah, so that's something to bear in mind. I don't necessarily expect that to happen, but You have to consider it. So this is the possibility now that we're in some kind of bullish ABC correction as well. So let me just put that all into this, put it into a bullish, and we have to see what happens. And at the moment, both Elliott wave counts are in play. Just have to see what happens. And we obviously have the original one. Now this original one, like I've done like a higher time frame analysis. This is actually wave 3 of a much higher time frame wave count, this whole wave here. So now technically on a much higher wave time count, on a much higher wave count, this is the wave 5 on a much higher, like we're talking all the way back to the beginning of Bitcoin. I'd have to redo that, and I will do that again sometime in the future. So let me just chuck that into there, and then let me put these onto market. Chuck that away. So I've got all of my lines and levels. It's a good practice. And then what you would think about is you're thinking about channels, you're thinking about SR flips and stuff like that, you know, because naturally we want to try to see where the price is going and where the price has been. So what I would do is I'll do a few things. I'll look at if there's any channels. And so like what I like to do is I like to do these bottom ones. Actually, oh god, it's thick. Make it a little bit thinner. Oh my god, why is it so thick? How do I make it thinner? Oh my god, it's on the thickest line. I could actually change it to a color. Green. There, that's better. So I like doing that. Obviously I'm using the log chart, so just bear that in mind. And then when I do channels, I always like to see where the midpoint is, and if the price reacts off the midpoint, and then maybe the high I would change to see something that lines up a little bit better. Let me see. It's so subjective, channels. And there's no right channel. They're all right, they're all wrong as well. So in the first instance, I like doing it on the complete outsides, on the edges, and there is a little bit of reaction here. It's hard to see, but it's that I would class that as a reaction, and that's a reaction, and there's clearly some reaction there. So you've got 3 reactions on the midpoint there. So maybe that's something to bear in mind, because I think this lower part would, you know, we're coming up to it. So if we stay in the current price range, then by the time we get to about July, yeah, I don't know how this is going to behave, but that could react, you know. So it's something to bear in mind. I think this lower part is very relevant. And then obviously the next idea is to try and find some kind of midpoint. There's different ways of doing it. Maybe we're into the midpoint now. Maybe this is like a lower channel. Let me have a look. So that's another idea, like there. Do you see that? Again, it's very subjective, but if you align it, I mean, the angle's quite good. You see here, if you take it to these lows here, and there is some kind of resistance there, there was some kind of support there, there was some kind of reaction here, and naturally you see the midpoint, there is a reaction all the way along the midpoint. There's a reaction. So maybe in the first instance this is actually quite a good channel to have, and so that's what I would do. I look at certain channels, these higher time frame channels, and I would you can't trade them really. You know, you use them for confluence, and it's always about where the price comes into certain levels at the right time. It's always about timing. So I do like this. And then the other channel that I like, which I've used, which I'm going to bring up again, is the previous bull market channel. It's a lot less steep. It's basically these two highs here down to this this low here, and I'm going to make that into white. And so you can see here with this you've got the midpoint here did react here. You see that there was a reaction here, there was a reaction here, there's a good reaction on this midpoint, and obviously you have the bottom here, and then here you see there was a back test which was a bit of a reaction, and you have both of the reactions at the top. Yeah, so I think this is quite a good channel. And look what's happened now. The price has come all the way down almost to, I would consider this as a reaction. Yeah, because it's almost like the price is front run, and you have a little bit of kind of resistance here as the price tries to come through. So I would say that this channel is relevant. So we have a couple of like potential channels in play right now. So this is something to bear in mind. And naturally, I think for the price to continue to be bullish, you want to stay above these channels. Yeah, you want to stay above these channels. And if we can like get to the beginning of July, then that's probably the most confluence you're going to have for the price at these levels, because you're going to be right above an area of confluence where you have two intersecting channel supports. So just, it's good to see. And then obviously the same thing's going to happen if we hit resistance at certain levels. Like if you hit resistance at the first week of June up at 62,000 or so, you're coming into resistance confluence. And so that's why these channels are quite good, because if at certain times they can behave, they can be stronger or weaker. And I think these two channels could be actually be in play right now, right? But this is just you can't trade them. I'm not saying trade these channels. I'm just saying just have those and think about them. All right, so I'll just create that into another group. Rename bull market channels. You can also do channels the other way. Channel. Can I spell that right? I don't know if I spelled that right. Never mind. You can do channels the other way. So you can take it. I think in the bull market you want channels from the lows, but you can also, now that we've formed a little bit of a pivot there, you know, you can do channels like that as well, and see if anything lines up. I don't know what the point is, because actually the bull market, we want the channels to go this way, not this way. But whatever. All right. I have those. And so the other things that I might be thinking about doing when I'm doing some kind of technical analysis is Fibonacci, Fibs. And naturally, you know, when as the chart develops, you can do more stuff. But one of the big kind of fib targets was from this all-time high down to this pivot low here. And as you can see, we crossed the golden pocket, and we've come to back test the 618 on the higher time frame, right? So at the moment, the back test of the 618 is offering support at the moment. You can see that there's a clear reaction on the weekly time frame on the 618 on a back test. You see that? So this is something interesting. So we are actually, it looks like we're sitting on support on a higher time frame. And what you can do is you can do like a full fib, and get your higher fib levels in the picture. So you've obviously got like the 786, which is just above us, got the 886, and obviously we've got the 1 and the 0, and then a lower down we have the 5, which is not a fib level, but it's 50%, so that's considered relevant. And then you've got the 382 and the 236. Yeah, and then if you want to, you can also, in terms of like higher time frame targets, the easiest one to do is a full extend. You can do an extension, and so naturally on this downward move, your first level of resistance above the all-time high is going to land at about 100k, 104k according to this. You have 104k, then you have 128k, and then if it overextends, which it probably will, then you're probably looking at a much higher target of 174,000. Yeah, so these are real targets in terms of fib extensions. These are actual targets, and it's very possible that all of them will hit in the future. I'm not saying it's going to hit tomorrow, but if we are in a bull market now, if people are buying and not selling, and if we do hit price discovery, which is above the all-time high, and basically price discovery is where the move begins, really. Yeah, because we have a lot of volume levels to still, you know, like if I pull all of these levels, you see where we see, if I bring all of these levels, yeah, it's like a Christmas tree. But where the price is here, right, and we still have a large number of levels to cross before we get to the all-time high. Yeah, you see that? These are liquidity levels, these are resistance levels, right? And so naturally the price isn't just going to go up, but once you get into the all-time high, guess what? It's empty. The only levels that exist in a price discovery scenario are technical levels based on Fibonacci, based on fibs. Nothing else. There's no volume levels, nothing. There's no like price levels. It's always fib targets when it comes to price discovery. Yeah, and then that can coincide with fib time too, but that's it. And maybe also potentially channels or pitfalls or arbitrary kind of destinations, but nothing concrete. And so that's really where the price will move fast. Once you get, if we get into a situation where in the future we form some kind of support on the top of this all-time high, then the price should move quite fast. Yeah, it'll go quite fast, and you'll probably end up at the first target very quickly, which would be roughly about 100k, and then beyond that people will start getting really bullish, and you can push and you can push as possible. Yeah, and quite naturally, because there's no volume in these highs, the price could drop quite fast too, until it starts hitting volume levels. So you start coming back into previous levels, the price will be very volatile. Yeah, very volatile. So this is something to bear in mind, and this is a very possible scenario down in the line in the future. And that actually, people are looking for the alt season. It's going to be when the price of Bitcoin is in the all-time high. Yeah, right now we're not really seeing alt season, you know, like coins aren't really going like parabolic. So right now is an accumulation season for altcoins, really. It's not alt season per se. So I think it's good to have this this full fib log, because these are very important levels above us, and obviously we have our channels. And then the other thing that could be quite good Let me hide that. The other thing that could be quite good are, I don't know if people have used these. It's called a VWAP, volume weighted average price. I think it's called volume weighted average price. This is an anchored VWAP. And so what you can do is from the previous all-time high, you can drop it. And what the VWAP does is it gives you the average volume, the average price based on volume from that period to date. So right now this is saying the average price based on volume from the all-time high to date to now is at about $35,000. Yeah. And what these anchored VWAPs based on pivots, they will always act as either support or resistance, and they're also magnets too. Just like the point of control. The point of control always acts as a magnet too. Yeah. So right now we're above the anchored VWAP from the all-time high, and what you can also do it from the previous all-time high. And look at this. So from the previous all-time high, the first all-time high of the previous bull market, the current price is at the anchored VWAP. See that? And it's acting as support. At the moment, the anchored VWAP from the first all-time high in the previous bull market is acting as support. Look at that. That's no accident. You know, when you draw these, do this technical analysis, you look at where we are, we're consolidating, but we're on top of support right now. And many times the price has tried to get back underneath it, and it's failing. It's failing. It looks like it's failing. Yeah. And so that's quite important. Very important observation. So probably this all-time high you can remove. And then the other thing you can do is you can take an anchored VWAP from this lower pivot, from this one here, to see where we are. And you see on the way up, as the price moved away from this lowest pivot, the anchored VWAP offered support once, twice, many times, 3 times a lady. And so now the anchored VWAP from the pivot low of this move is at about 29,000. So on average, the volume price is about 20. So a lot of people are still in good profit. You know, they're sitting in healthy profits, and you know, as long as people are sitting in healthy profits, I'm not expecting any kind of crazy sell-off. You know, and this is the thing, like, people only sell off when they start going into losses, because they're trying to cut their losses, and the only way they can do that is market sells. And so as long as you're in healthy profits, you're not selling, really. You're not really selling, you know, especially when you feel confident in your position at the lows of the move, of whatever the move is. And so naturally, there's a lot of people who entered Bitcoin in 19 at $3,000 or whatever, anywhere in this range here. They haven't even sold. They're not even bothered. They're just hodling, hodl. Yeah. And you know, sometimes when the price gets to certain levels and they want to buy a car or a house or something, they'll take a little bit of profit, and they'll use their position as a bank account, effectively. That's constantly growing in value and size as the network grows. You know, that's how people behave with their crypto portfolios. And obviously Bitcoin is the safest one because it has the largest market cap, it has the largest interest of all of them. But you know, all of the crypto assets can behave, as long as they're safe, as long as they're not scams, all of them can behave like this if you approach it with the same mentality. So anyway, this VWAP is quite interesting. I think the most interesting one now is this one from that one, that high there. And then also let's have a look at this COVID pivot to see where we are. So from the COVID pivot low, this is quite interesting, you know, when you look at the price action. Delete these. The COVID pivot low, we're above the COVID pivot low too. See that? So the how amazing is that? So the average price for all of the volume since the COVID pivot low is at $39,000, and we're above it now. So we're above average right now. The price is right now. So if anyone was like scaling in since COVID, the price is above their average position right now. That's basically what this is saying. So that basically everyone who's been scaling in is in profit. Really, really interesting observation right now. I'll add that because as long as they're acting as support, I don't see why the price is going down. We have to see how that plays out. AV wraps. I think these two are the most pertinent ones, and obviously we have a lower one from this pivot low here, so I'll add that too. I think that's quite important too. Let's see that one. See if it's different there. It's a little bit higher. Don't really like it. All right, you can chuck that in there. And then the other thing you can do, can we do it? Yeah, possibly. You could probably do like some kind of higher time frame pitchfork. Don't know if anyone's used this tool before. Probably from this COVID low to the all-time high. To that pivot. Let me see the pivot, maybe, right? And then let me see. Nope, that's rubbish. What do you think? That's not going to show me anything. It's interesting though. Look, that's an inside pitchfork for that. Yeah, I don't really see anything from that kind of pitchfork. I can try some other pitchforks as well. Let me see. Maybe from here to here to here. I mean, it was quite good for the bull market, but it doesn't really help us. It's interesting. See this pitchfork, this modified shift. It's so interesting how, look at where the price comes to find support here and here. See that? So it's really interesting how higher time frame TA works, and it's always hindsight, you know, it's always hindsight. But you know, when things happen once or twice, then you almost think, now I know that this is good, you know, like it's always good to like reevaluate and reanalyze and use all these kind of tools on the higher time frame to see what they're saying, to see if they give you some kind of information, extra information. Let me try this COVID low again. Try that pivot instead. Maybe it's almost there, but it's not there. That's a shift. don't really like it. I prefer this lower pivot. Maybe this is back though, look. Maybe that's more relevant. And then if you have that, the all-time high. I don't know. Maybe it was better there. You've got to play with these things. I can't see anything right now on the using pitchforks. Maybe there is. I can't see anything right now. Maybe actually I have to use a different chart to get more data from the back. So pitchforks are something very interesting. Also, these GAN fans are quite good as well. So what you can do with GAN fans is you can use these pivots. This was the white one, huh? To see how that kind of corresponds with these higher pivots. And actually, look, this is quite interesting. So from the COVID low to the first all-time high, we are coming into a little bit of resistance now. And naturally, what you want is you want the price to get above it to go up to the next level, you know. So until we get above this kind of GAN fan, this 4-1, we're kind of still underneath resistance. Something to bear in mind. And then obviously what you can do, you can obviously do it in reverse as well. So you take it from that to there, but we've, look, you see that all the way down to this pivot, we're coming into the 8-1. Let me do this correctly. Let me do this precisely so you can see. So this is from the all-time high down to this pivot. See that? So this is clearly in play, clearly. The reason why you can tell that this is in play is because here the price resisted. See that? And then and here it's resisted here as well. So we definitely have some kind of arbitrary and invisible lines which are controlling the price. You do again from this COVID low to the same pivot height. Don't really get anything. Maybe this one as well, possibly. This one's better. Potentially this one's better. Maybe here. Maybe this is better from this first pivot. This first pivot, all-time high down to this low. And then what you can see is nice support here. And then resistance there. But we had nice support here as well as the price is coming down. And then you have it here as well. See that? It's kind of, it's an idea. It's like, it's this, you can't trade this. It's just good to see. All right. Now let's just go back to, so what I would normally do is I would basically get all my lines out like this. Actually, we don't need the counts. I'm zoom in a bit and try and figure out what to do. Yeah. See if you can see confluence, and I think when you're looking for confluence, you're looking for the most amount of levels in a short space, and I can see clearly that we have we still have quite a lot of confluence up here. See that? So I think the minute we go back up, we're going to come into resistance again, but we still have levels to cross. We have this naked weekly point of control. We have this daily level. We have a point of control. We have this weekly level, which is then we have this month. You know, we have all these levels to get through, and every single one of these levels is going to offer a potential trading opportunity to make money, basically. And on the way down, we have levels 2, but obviously we have some significant levels here. There's value area low, which is joined up with the naked monthly point of control. I think that's quite, potentially that's quite powerful. Why is that there? Let me see. Range pools. Let me get rid of these range pools. So there's a little bit of power there. Do I have my fib retracement? Yes, I do. When you're looking at this, you're looking for the most amount of lines that kind of have confluence. And that's when you're trying to do TA. You've got all your different levels, and now you're trying to find confluence. So I'm trying to see where, and the price, obviously, you know, the price is moving in time, and it has to hit the right places in the right time. Let me get rid of this count as well. It's irrelevant. You have the channels. We're at a really good place for support right now. We're kind of above this 6-6 level. We're above this weekly level. It's a pretty good place for support. So if we hold here, you know, it's not a bad place to long, to continue going up. And then when you look at the candle structure, this yesterday's daily candle was mega bullish. You know, you had a massive expansive candle. Let me check the volume. The volume was good. You had increasing volume. It closed above this previous red expansion candle, all the way above the previous red expansion candle high. That's bullish. It has taken the liquidity from the top of this wick there. So there was no squeeze. Usually when you get a squeeze, the price will continue going. So it's taken the liquidity. The price is closed a little bit lower. So I would expect some kind of, potentially some kind of consolidation here. That would be a bullish consolidation. A little bit of consolidation here for another push up. I think probably that's the most likely scenario in this situation. Some kind of consolidation here before another push up. But you have clear levels to lose before you get bearish again, because we are above certain levels here. That's what I'm seeing. And then you have targets in the higher targets. So if you zoom in a little bit, I mean, it depends how you're looking for trades. Are we looking for higher time frame trades, or are we looking for local trades? But I think this was quite a bullish reversal, this whole kind of behavior. Look, it's even formed some kind of head and shoulders, although it's kind of failed, but then it exploded. Yeah. And potentially what we're looking at is like a much higher time frame head and shoulders, potentially, you know, potentially. But we have to see how this plays out. And the fact that we're kind of back above these levels, above this high time frame VWAP, yeah, and so naturally, let me just get rid of that now. That's irrelevant. So we have a naked weekly point of control slightly above us. I think that could offer resistance in the first instance. So, and then if you, so what you could do, if you're trying to form a trade plan, depending on whether you want to scalp or whether you want to take a much higher time frame position, you do a range pull there. You can see that it's this naked week point of control is coinciding with this volume area. So it is possible that the price goes up and kind of rejects in the first instance. It's very possible. So you'd be thinking about possibly a short there if you see a reaction, because there's no reason why we're going to get back into this volume area on the first attempt, especially when you have a naked wicked point of control. It's a point of control from a previous week that hasn't been traded through yet, you know, so it's obviously going to offer support, resistance. And also, if we do manage to get back in to this volume area, you're coming up into a daily level, which is going to be a liquidity level, which corresponds with the value area high of this mini range. Yeah, so you could potentially also short there, but I mean, and we also potentially have a long here where we are now, because we are on support, you know. And so all you really need for longs when you're going to long is an invalidation. And so when you get some kind of pivot like this, you have your invalidation, you know. So you could wait for the pullback, and then you have your pivot, and then you could long to go up. That's kind of the idea of what you're looking for when you're looking to make a trade. So there's a lot of like levels to short as we go up. There's no reason why the price is just gonna go up, and I think people have to understand that we have liquidity levels above us, and we have previous volume levels above us, and every single one is going to offer an opportunity for a trade. Every single one, as we go from level to level, we're looking for opportunities to trade, you know. And that's what you have. You have levels of, and if you see a reaction at each level, you could take the trade, and you can at the very least scalp your 0.5% or 1%. You could probably do that. But I think in my mind, the big trade is going to be this kind of like higher low idea. Sorry, this lower high idea from the top of this pivot down to this. Get the right one. Is that right? No. It's annoying. Magnets. I need to zoom in just to get it. On a 1 hour chart, that's why. I really, I mean, you're coming into the golden pocket, yes, but actually a little bit higher up would be better. That's the thing. And so the other thing you could do is you could take, let me see where this range pull was. Yeah, you got the point of control there. So the problem is that the golden pocket is above the point of control. It's not going to be, and that's from this whole range here. So what you can do is, let's get rid of these range pools. Where are they again? So if I do another one from this expansion here, not this consolidation here, this expansion to the current price action, to get slightly more recent information. You see, the problem is that the liquidity is all the way above this value area. This is a real problem. Like, I think because the point of control is in the highest range here, that the minute you start going above it and above this value area high, it's going to look really bullish. Yeah, really bullish. And you are coming into like golden pocket resistance, but the golden pocket resistance doesn't actually have confluence with anything, you know. So you've got a lot of levels, but they're kind of all kind of staggered. And so actually the highest kind of the highest level that you have is up here. You have a couple of dailies, you have an MPOC, a daily MPOC and a weekly MPOC. It's up here in the higher region. So it is, so this is really possible. So I just want you to bear this in mind. Yeah, it's very possible that we look super bullish, like extremely bullish. Yeah, now that we've come back into this range, as long as we hold this value area low here, I do expect that the price will go back up to the point of control. So I do expect us to get back up to this red point of control here. I don't see why we wouldn't. I don't think it's going to be a straight line. There's going to be a lot of fluctuations in the price, ups and downs, a lot of opportunities to short and long. Yeah. But effectively what you're going to get is you're going to go from one level to another level to another level down to the other level, and you're going to zigzag all the way up, right? Potentially. I mean, it may not happen like that. It depends on the current consolidation, because if we consolidate here for a while, then you could just squeeze up as well. That's possible too. So we have to see how this plays out. But you either go up in steps or you consolidate for a while and then you squeeze, right? I do foresee us getting back up to this point of control. I think there's a really good short opportunity at the point of control. But I think in the way you've got short opportunities of this naked weekly point of control. We've got a little bit of a daily level here with this value area high of this previous range, and effectively these are scalps. And obviously the long opportunity is now, and it's, you just need an invalidation, and we are like holding support at the moment, so something to bear in mind. It's not going to be, you probably need, like for a long here, you probably need to ladder in and have a slightly wider invalidation, probably, and your risk versus reward is all the way up to the point of control at the highs. Probably that's kind of what you're looking at until you get some kind of like a behavior which gives you the invalidation like this. Once you get something like that, it becomes easy to take the trade because you have a clear invalidation. So you can have a much shorter stop loss, and it's like losing a level and reclaiming a level immediately afterwards. That's pretty good behavior. That's pretty strong behavior. And then you can take that trade to go up. But obviously in the meantime, as you go up, you have levels which you have to cross. And so there are like short scalps on the way up potentially, and there are scalps. So you're not looking to swing those because you're in the middle of the range. You're not looking to hold those for long. You're just looking to scalp. And then effectively, I think the big trade is probably going to be some kind of swing failure of this pivot here, which is also the 50%, which is also into the point of control, which is that level there. I think that's the big trade right now for a short. And then you have to see how far that reacts, you know, because that could react quite well. You could get quite a big reaction of that kind of behavior, and it'd be very easy to see that trade because you're looking for a swing failure here off that level there. So probably lower down there. And then once you get an SFP here, you could short. You can short, you have your invalidation. I'll put a line there. Call it SFP. Just, I think if you get an SFP, you want the liquidity to be taken first. Look for reaction to POC. And so really you want it to go up and then come back down. You don't want it to just SFP without going up into that higher time frame liquidity, the point of control, maybe even the weekly level, or if you reclaim the point of control and then lose the point of control, you could probably take that trade to short, and then naturally your target, your initial target will be the value area low of this range, probably somewhere down here, and then maybe by then you could do like a fib, another fib pull, and aim for the low of the range. You know, from the point of control, you'll be looking to short it down to the bottom of the range. That'll be the first kind of trade, but maybe also this reverse, this golden pocket reversal here, back down to here, back down to here again, where we are now actually. Yeah. So there's a few ideas there, and I think what you can do now is let's get rid of all of these. Where's that VWAP? So we're above the VWAP now. So we're holding the VWAP now. That's pretty good, huh? So you know this is not, you could probably long this now actually, you know, like wait for this candle to form. Probably long that, have your invalidation will probably be somewhere there. Let's get rid of that. So you have, yeah, you definitely have a like a reactive level here. So you could probably look for a reaction and short that. There. Get rid of that. And then you obviously have a daily level here. You see a reaction of that. You could probably short that because actually it's coming into the previous level volume value area high. But I mean, you may not go for that because I mean it's because slightly above you, you have a much better short, which is a swing failure, point of control, and weekly level, all kind of within the same $500 range. Yeah. So I think that would probably be your good, your nice short. You could probably try and short that all the way down there. You'd be looking for the liquidity to be taken first, and then to see a reaction off those levels. And then when you see a little bit of weakness, a little bit of reversal, you could probably look for a short, take the short, you have your invalidation. It's kind of what I'm looking at now at the moment. You say take a screenshot and send it to David because he's probably not watching. All right, so this is quite messy. It's never fixed ranges. I'll get rid of that. I'll put that was that one. Put those in range pools. It's good to organize your charts as well. So that's why it's good to clear your stuff. All right, and I'm in one position. Let's have fib retracement. Yeah. Normal, so let me put those in there. Create a group, rename, trades, set. Perfect. Put that in there. Done. What do you think? All right, let me see if anyone's even watching. Yes, I have one concurrent viewer. Oh, it's me. I'm watching myself. That's cool. Well, anyway, what is this lag? It's not much. Okay, it's fine. Open widget. All right, that's fine. All right, so I think that's Bitcoin right now. I think you could potentially long to go up. The daily candle was bullish AF, so you have to bear that in mind. This is a really nice reversal structure. So obviously it is possible for the price to go down to fill the right down to there. before it goes up. And then the other thing you have forming tomorrow is a weekly candle. We have to see how this weekly candle closes, but does it close above, you know, like, could we get a full reversal pattern, or does it close like, I think a close like this in my mind is bullish, right? Because it's there's a nice blind buying tail there. Yeah, it's a buying tail, and you've taken the liquidity from all of these lows. That's an SFP, that's a swing failure pattern on the weekly time frame. That's really bullish. And so you have an easy invalidation on the weekly time frame now. If this candle closes like that, it's like that, it's there, it's an easy invalidation. So technically, if this weekly candle closes like this, technically, you know, that's your trade, you know, that's your trade, and just take this as far as you want. You know, how far do you want to go technically, because that's a really nice candle. That's a really nice candle. If it closes like that, it's kind of similar, it's very similar to this candle here, you know, very similar. Probably more bullish potentially if it closes, it doesn't really matter if it closes green or red, because you're taking the liquidity from the lows here. Yeah, green would be better. But the same idea of the trade on this candle here, just on that candle, and we're looking in the higher time frame now, but look, it never, that was it, you know, like that was your invalidation. You're not, when a candle like that forms, where it takes the liquidity, you have your invalidation underneath the bottom of the candle. You're not expecting the price to go down, then you're invalidated. You know, you could throw 1% at that, you could, and it's already done a 1 to 10. So you risk 1 and you get 10. It's already done a 1 to 10 just on that one single candle. It's a weekly time frame. Just that one candle in the correct position, and a higher time frame trade off that single candle gave you a 1 to 10 ratio trade. So we are potentially forming that kind of candle here, potentially. Now look at this one. So if you have that kind of candle there, you also have that kind of candle here. Now this didn't expand as far as it could have, so potentially we could potentially see this kind of behavior form again in this kind of range. And so naturally, if someone was to trade this candle, just the candle, yeah, and do a long position here, the invalidation is the low of that candle to the highs of this range. It did a 1 to 3. That was a 1 to 3 trade before the price came and invalidated, took the liquidity and stopped people out. And obviously you would have taken profit along the way to make that a risk-free trade. But they are quite powerful candles, these weekly swing failures. They're very powerful, especially when you get like a buying tail at the bottom. You had the same thing here. Like it's always easier to see in hindsight, but you had the same thing here. Look, you see this this weekly candle, this green candle, it closed above the previous week high. It took the liquidity from all of these lows. Yeah, if you just traded that one candle, if you're just looking for that one candle every single time to trade, just that one candle, and you don't even have to have a great entry, your invalidation is the bottom of that candle because you're only looking for that candle. Your target is probably the highs, which is a 1 to 3 ratio, risk versus reward. But actually it did much more. It went all the way and did 1 to 12, 1 to 10, 1 to 12, you know, just that expansion, just that single candle that you're looking for, that single candle. And so these weekly candles where you take the liquidity from the lows, where you close back into the range, are very powerful. And the key for these candles are invalidations, and you have your invalidations because you have a buying tail, you have a pin at the lows. Yeah. And so it is very possible that the price now tries to traverse to the highs as far as possible. We have to see how far it gets, because there is a shitload of liquidity above us, and it is very possible that we have these big whales sell into that. You know, it is possible. So I think I'm feeling a little bit bullish right now, and the main reason why I'm a little bit bullish is because I feel like we are back into this range. We are back into this range, this volume range, and that's what makes me bullish. Yeah, reclaiming higher ranges is a bullish behavior, price action. Yeah, if we were bearish, I wouldn't have expected the price to get back into this value area, or at the very least I would have expected some kind of a quick loss, like a really quick failed auction above that. Yeah, and that would have been bearish. You can tell, you know. Then when that happens, people would be shorting because they would have seen that price action and that behavior. But the fact that we've come back into the volume area, the fact that we've taken these highs, we've taken all of these highs, is bullish. It's bullish behavior, you know. So you have to just trade the price action and see what it's telling you. I'm feeling bullish right now, but only to the point of control. It's like, you know, once you get to the point of control, then you have to see what happens. You know, you have to see how the price reacts. Let me have a look at the order flow and to see if there's any divergence on the price. Not really. Don't see it. Don't see much divergence here. Don't see any divergence. Nope. Looks fine. Looks quite healthy. OI is dropping. That was a short. Someone shorted there. That's a 2 million. It's like a 2 and a. Didn't really say. Delta is positive, 970.49. So people were shorting and longing in this bar here. So on aggregate, actually, there was more people longing, but the price went down. So you could argue that's quite bearish. This bar is quite bearish, but you know, this is just one bar. It doesn't really reflect anything. I think right now the OI is dropping. See that? So I think no one is opening leverage positions right now. The price is just going flat. So I think possibly people are waiting for slightly lower or probably higher before they make their trades. I think that's the way traders are. They don't necessarily participate in the middle of ranges, you know. They're looking for the edges. Yeah, I can't really see any other. Arguably the CVD is slightly bearish, but until we get a higher CVD, higher than here, to see where the price is, you wouldn't consider that. And obviously earlier on we had some liquidation bubbles here. That was yesterday at 7. So naturally, when you see these big liquidation bubbles, the price usually reverses, and it has done so. And we had the same behavior down here with these liquidation bubbles. When you see these liquidation bubbles, the price, generally speaking, it tries to reverse. Yeah, that's how it is. The price goes and liquidates, and then it goes the other way. So it's quite useful to see this this on XO charts. But I am feeling bullish. I wouldn't mind a little bit lower for a long, but you know, we have, you know, people will be longing as the price comes down. And as the price comes down into the value area low, people will be longing heavily. I can see that. All right, that is Bitcoin. I think I've done a pretty in-depth analysis on Bitcoin. I think I'd be more interested to see how the price reacts on the highs for a lower high. And then right now I'm feeling quite bullish, so it's probably best to be looking for longs. And then the trades in play at the moment potentially are, yeah, that would be nice to go down, take this low. Is that possible? You know, take this low, SFP that. Don't know if that's going to happen. You might, you know, like you would take that trade, you know, potentially SFP that low. That would be nice. And then a little bit higher up, you'd probably be looking for a reaction. And those would be more scalpish shorts. Yeah, be looking to scalp those until you get into this higher SFP area. That, I think that would be quite a big short, because you're into the point of control on the weekly level, and you can short it all the way back down to the value area low. Obviously you take your profit as soon as you can, so you have a risk-free trade. That's kind of what I'm imagining right now. Let's see how the price action behaves. It's not going to be easy to do to trade Bitcoin when it's in the middle of a range. So I think then it might be easier to trade altcoins. to bear that in mind. Let me have a look at this. Right. So don't know if anyone's watching. Probably not. No. Dan left. All right, you'll be back. What I'm gonna do, my connection's a bit rubbish, so I'm gonna just reset my router, and then I'm gonna start having a look. I'm gonna have a look at TRVL probably. Back in 5 minutes. All right, I'm back. Hopefully it's better. Let me see. No, probably not. It sucks. So annoying. Yeah, it's better. That's good news. All right. I think the big area of interest is this higher area, actually. Right into the point of control. I think that's probably going to be the best risk to reward trade. But okay. Can we have a look at ETH BTC? I think you probably expect the alts to have a little bit of some love when you get down to here into the point of control again. Bitcoin dominance. Yeah, it's still kind of going up. USDT has fallen back. See that? So I had that idea, and effectively what's happened, look, on USDT is it's rejected this point of control, this previous mini range. We're now back underneath this kind of previous high level. So we are on top of this kind of support channel. So I think if we get, like, if we lose that for USDT and TD on market cap, crypto cap, it would look quite bearish. So we're still kind of in between support, in between resistance, but it is looking like a little bit of a failed auction. Interesting. So